Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. So the SPY bulls and the market bulls certainly proved themselves today, fending off any worries about bear flags on the daily with an emphatic push. But after hours, we have some uncertainty, some further China news where the U.S. is potentially calling off trade talks, and if China cracks down on the Hong Kong protests, then we're going to take these measures, and just more negative headlines after hours. But it's just going to follow through with the equilibrium pattern. And if I had to choose only one pattern to be aware of in the stock market and to get good at trading, it would be an equilibrium pattern, because you see them everywhere on all time frames, and they happen often. And they happen after big bull moves or big bear moves. Essentially, when we see a significant move in one direction or the other, and we have a new trading range, then we have price discovery. And we look for the low of the dump, the high of the bounce, a higher low, and a tightening range until we eventually get a break. I like playing within the range when it's still wide, and then once it gets to a certain point where it tightens up, I patiently wait for the break, and then the break is what I trade. So for SPY, we made a move where with the close today, we were closer to an all-time high than we were to the low of the dump. And that's a little bit surprising because we were at the low of the dump yesterday. So we're 3% from the all-time high where we closed, which is where we are. We're not there right now. We'll look at that in just a second. So 3% to the all-time high. And in order to see a bear break, it's over 4% to the downside. So again, if you put me in a room and said, we'll give you $1 billion if you can predict this pattern, I don't try and predict, but if I had to, it would be, that's not a good line. Bear with me. This is what I would be looking for into next week. That's the most likely pattern. If anybody can disregard that pattern as to what most often happens, it's the S&P 500, and it favors the bulls. And what I mean by that is the dump back in December. The biggest shock to me was that we V-shaped recovery to higher highs. The fact that we did not get this tightening range, which is exactly what we got on oil, tells me that there is, behind the scenes, obviously we know big money wants the market to go up. And in my opinion, call it manipulation, call it whatever you want, it is going on. Because if you look at oil on the weekly time frame, this is exactly what I would have anticipated for the market to do following the December dump. A 10-month drawn-out equilibrium. And we got it on oil, and we got it on some other names. We got it on the biotech sector. We did not get it in the S&P 500. So, going back to my original point, if anybody can just V-shaped recovery to all-time highs, it's the S&P 500. But with this after-hours action, and just looking at it, we recovered a bit. Actually, we're not down that much. 293, we closed in the upper 293s. We dropped all the way down to the low 291s. We dropped $2.50, almost a 1% drop. I care more about the price action during regular trading, and the reason for that, if we're going to go back and look at the dump after hours on Monday, we dropped down another, 1% or so. Over 3 hours, it was 2.5 million shares traded. And if you look at regular hours trading to start the morning, we see 2.5 million shares traded in about 6 minutes. So 3 hours with the amount of volume we usually see in 6 minutes, which is why I care what the price action is doing when there's real volume being traded. So I pay attention to extended hours, and I make note of those levels, and they do come into play, but it is more important to me what we're doing during during regular trading hours. So tomorrow it'll be very interesting to see where we open, but I wouldn't be surprised to see an inability to break 293.62, the high of today, and if that's the case, we'll just look for a daily inside bar. So again, this is the kind of thing where I love being a day trader because number one, I'm not in bullish positions exposed to the weakness overnight. But number two, I start tomorrow with a fresh, clean slate. And if we see a higher open right near the high of today, there's a potential top fishing play. If we see a lower open in oversold conditions, then I have a completely different trade game plan. And it all changes. I don't even try and make a game plan overnight. I wake up early tomorrow morning. That's when I set the game plan, when we have a lot more information as to what futures did overnight. So again, we're just looking for a daily lower high to be set. The hourly time frame is extended. We have not seen an hourly higher low established during regular trading in the last 2 days since that bottom. Actually, you could say we did form a little higher low here at 284.20, but nothing since then. So if we pull back tomorrow, we will just be looking for an hourly higher low, and how much we consolidate is going to dictate whether or not the bulls are able to keep their control. So just off the top of my head, I know I will probably be scouting bearish. I would not be comfortable going long up here after that significant of a bounce with no consolidation on the hourly time frame the last 2 days. Short-term resistance after 293.62 is 294.12. And again, a lack of short-term support. We're going to have to use the 15-minute time frame. 292.14 is a key level. This is the 15-minute chart. And there's not much under 292.14 aside from the low of today. So IWM, very similar. Again, everything that I just said is going to apply to any name that saw the big dump and the big bounce. We're going to be looking for a lower high to form. And then when we top out, we're going to be looking for a higher low to form early next week. So the hourly time frame for IWM, have we found an hourly higher low? The answer is no. So again, the low of today is going to be support, and we will anticipate daily inside bars will be likely if we cannot break resistance tomorrow morning. QQQ, same thing, strong close. Do we have an hourly support? Again, this is extended hours, so I care less about it. So no, I would say we don't. If we were to open tomorrow, right now at 187.89, then I would care about that level because we didn't consolidate at any point during regular trading. That's the clearest nearby support, and it happened in extended hours. So that's when I do pay attention to it because there's nothing else nearby. If we had this level of support is 186.48, if we had a regular trading hour support of 186.12, I would consider that much more important than this 186.48 level. The point being, if there's two levels somewhat near each other, one's in extended hours and one's in regular trading absolutely gets my attention every time. It's the scenarios where there's nothing nearby where I default to the extended hours levels. So XLF, not as significant of a bounce, but still the same scenario where we are going to be looking for a lower high to form. Hourly time frame did consolidate during regular trading. 27.11 is a support level. That's why we don't see as significant of a bounce, because a couple hours today was consolidation that everybody else that we just looked at did not see. XLV, significant bounce. 92.52 is the key resistance here. We're closer to the daily lower high resistance on XLV than out of anybody that we just looked at. So still unlikely to break that level on the initial attempt. We will look for a lower high compared to 92.52, but bulls in a decent position. We also have an hourly higher low here as well, 90.91. Biotech sector, looking for a lower high compared to 87.70. Hourly time frame does have a support, 84. When we lose the hourly uptrend, that's the first indication that our daily lower high has been set. So we look at the longer term perspective, the bigger picture, and again, I look at all these charts and I say a daily equilibrium is the most likely scenario. So knowing that I'm looking for a lower high, I then zoom in for the details, and losing the hourly uptrend is the first indication that the daily lower high has been set, and we then look for the consolidation to form the daily higher low. The VIX pulling back significantly. We're going to look for a bounce in the VIX. Same thing, equilibrium, and we've seen them in the past after a big spike. High, low, lower high. Again, another one, high, low, lower high, higher low, bear break. So exactly what we're going to be looking for, a higher low to form, a bounce into a lower high, and that's going to play out into mid to late next week, in my opinion. Of course, news headlines can change anything, but at this point, I would say the headlines are only solidifying what I feel would be the most likely scenario, technically speaking. Gold today, daily inside bar, candlestick has rolled over, and we're testing this resistance. Couple tops up in the same level, watching the 4-hour time frame. If we were to see a bear break of 14.89, so we have our high. This is an equilibrium. High, low of the pullback, inability to break resistance, and if we pull back, we'll see if the bulls can hold 14.89, tightening range. If we lose the 4-hour uptrend, it'll be the first time in multiple days that that's happened, pretty much the first time in August, and we'll zoom out and look for a daily higher low to form. 4-hour time frame, losing the uptrend means daily consolidation will be underway. Multiple tops. We'll see if there's a play tomorrow in minors based off of gold resistance. Silver, not as strong. Multiple daily inside bars, but look at the 4-hour time frame. We're not up at resistance. So a little bit of a different setup. This is continuing the bounce of XAU, XAG, or I should say the pullback of XAU, XAG. The tightening range, again, equilibrium, high, low, lower high, trying to form this higher low. Not enough follow through just yet. We'll see if we get it. Right now, the most important levels are 87.33 and 89.85. And again, how this pattern breaks is going to dictate for the end of August who is likely to be stronger at the end of August, silver or gold. That's why it's an important chart. Bull miners, nice day today. Closing up at the high, trying to form another daily higher low, just brief consolidation, and then looking for continuation. And look at after hours, we're right up there, 41.90, testing that level, trying to be a cup and handle pattern where we have the left side of resistance, healthy consolidation, inability to break the left side of resistance, bull flag, and then we'll see if tomorrow breaks out to higher highs. And if we see market weakness, and if gold breaks that double top, you better believe bull miners are going for more. Oil bounce is not significant at this point. We need a 4-hour trend change to have confidence. I'm watching the 4-hour exponential resistance, which has been giving the bulls some trouble. But I need to see some significant follow through if we're going to believe that the bulls can hold this double bottom at 50.59 and 50.51. Pretty much if the bulls can make their way up over 54, then we'll start to say, all right, we could stay in this weekly pattern for another few weeks at least. Natural gas, who cares? Still nothing on the daily, still nothing on the weekly. Patiently watching, biding our time. We will go aggressive when the chart dictates a break in range. Again, we will break this weekly downtrend. Whether it happens at the end of August or whether it happens at the end of December or early March, I have no idea. But I know that we will break this weekly downtrend and the bulls will have significant opportunity. And rather than scaling into weakness, I'm going to trade other things, stick this on the back burner, check in on it every day as I have been, but have no interest until the chart gives me a clear risk to reward setup that I like to make an entry based off of. And most notably, what's missing for me is any kind of bull momentum, even on the daily time frame. So that's that. We'll see what tomorrow brings. Again, too extended for me to be liking bullish entries up here. Tomorrow's the kind of day where if we opened at 293 and the bulls break the high of today and keep going, I just don't trade because I'm not going to be suckered into buying a bull position up at these levels unless it's a quick flip. But even then, I would probably, it's how I eliminate half of the direction every morning that I can, where I say, if I can't find a bearish entry that I like and good risk to reward setup, then I'm not trading today. And having that discipline allows us to do this year after year after year after year. Otherwise, we just give back our profits when conditions aren't ideal. So thanks for tuning in. Here at the end of the video, back to road trip videos from 8 years ago. We got some sand dunes in Idaho and I forget what else. Bear in Yosemite. We'll see you tomorrow. Have a good night.
Hey, man, get at it!